All right, today we're breaking down a pretty fascinating crypto forecast that looks out to 2026 and 2027. Now, what makes this one so different? Well, it's not based on guesswork or just gut feelings. It's built on a very specific analytical framework, something called Triune Harmonic Dynamics. So let's dive in and see what that's all about. The whole forecast we're about to walk through really hinges on this one core question. What if all the chaos we see in the market? What if it isn't random at all? What if there's actually a hidden, predictable pattern driving everything? And not just crypto, but, well, all change in the universe. Okay, so to really get the forecast, we first have to understand the theory behind it. And that brings us to this idea called triune harmonic dynamics. The core proposal here is kind of huge. It suggests that everything, and I mean everything from financial markets to molecules, follows this universal 369 pattern. And at its heart, the theory is actually surprisingly simple. It's called THD for short, and it was developed by a researcher named Kevin L. Brown. What he suggests is that all change, all transformation, happens in a predictable three-phase cycle. It's a really bold claim, right? The idea that one single rhythm could govern how absolutely everything in the universe evolves. So here's what that cycle actually looks like. It all starts with emergence. That's the birth of something new. Then you get contrast, which is a period of tension, of conflict, that really tests that new thing. And finally, you have integration. That's where all those opposing forces resolve, and you get a new, higher, more stable order. And this three-stage process, it just repeats over and over again. Now here's a really crucial point. This isn't just some philosophical idea. It's actually expressed as a mathematical formula. Look, we don't need to break down the math itself, not at all. The important thing to get is that this equation is designed to be a kind of map for that universal cycle of growth, challenge, and resolution. Okay, fine, a big universal theory, but how does this apply to crypto? Well, this quote from the forecast really nails it. The prediction is that we're about to see a huge shift away from speculation and toward real utility. The value isn't going to be in the token as some kind of bet anymore. Instead, it's going to be in the block space. The actual horsepower on the blockchain that's needed to run transactions and applications. It's about crypto becoming the essential pipe for global commerce. So, this is where the rubber meets the road, where the theory gets applied directly to the market. Let's take a look at how that three-phase pattern, emergence, contrast, integration, is mapped onto the crypto world for the next few years. All right, so here's the forecast broken down into three pretty distinct phases. First up is the regulatory lock. This is where big institutions really take the lead away from retail. Phase 2 is called the quantum ghost. Think of this as a period of serious fear and friction, all driven by the threat of quantum computing breaking older cryptos, which causes a massive sell-off. And finally, phase 3, the unified ledger. This is where central bank digital currencies actually integrate with public blockchains, becoming the new standard for global trade. And see, this brings us right back to that core idea of utility over speculation. The forecast says that by 2027, the whole conversation changes. It's not about will Bitcoin go up anymore, it's about infrastructure. The most valuable thing becomes the block space you need to run your business, to run AI, to run logistics. It's basically a fight over who owns the digital highways of the future. All right, let's get a little more specific. A forecast is only useful if it gives us some clear milestones to watch for, right? So let's look at the key dates and the specific drivers this model points to. So the model points to three main catalysts that are really going to drive this whole thing. First, stablecoins are predicted to blow up, hitting a $500 billion market cap and becoming a go-to tool for global logistics. Second, a big one, the mining of the 20th millionth Bitcoin, which is expected to trigger a major scarcity shock. And third, that quantum anxiety we talked about, it's predicted to cause a huge rotation of capital, money fleeing older, vulnerable cryptos and rushing into newer, quantum-resistant ones. This timeline here kind of lays it all out. In the first half of 2026, you see the big institutions setting a new price floor for Bitcoin. Then, by late 2026, that quantum rotation really kicks into high gear. And fast forward to 2028, and that's when we see the final phase, a unified settlement layer where government and private digital currencies basically merge into a single global system. The forecast even gets specific enough to call out a particular market dip. It predicts something called an energy grid stress event sometime in late 2026. This is supposed to cause a temporary 20% flash crash in the hash rate, leading to a sharp price drop. And get this, it's described as the last exit for retail investors before the institutions really truly take over.
Okay, now for what might be the most important part. For any forecast to be credible, you have to be able to test it. I mean, there has to be a clear way to prove it's wrong, right? So let's look at the specific conditions that would completely invalidate this whole model.
This idea is so crucial. A real forecast isn't just some vague prediction. It's a hypothesis, and it has to have clear boundaries. It needs to provide an off-ramp, a set of measurable conditions that, if they happen, prove the whole model was wrong. And here are those exact conditions. First, you've got a price failure. If Bitcoin falls below $40,000 and stays there for more than 90 days in 2026, the model's busted. Second, a tech failure. This would happen if a developer actually proves a quantum-safe patch is impossible for the major blockchains. And third, a regulatory failure. If the US and EU completely reverse course and just ban private stablecoins. But out of all of those tests, this next one is the big one. The absolute most critical test. This forecast is all about timing. So if that big sell-off of old crypto, that quantum rotation, doesn't start by the first quarter of 2027, then the whole timing model is considered structurally broken. Game over for the forecast.
So what's the ultimate conclusion of this whole model? Well, it's a pretty radical transformation. It says that by 2028, the crypto market as we know it just won't exist as a separate thing anymore. It'll be so fully integrated into the global economy that it's just the global digital ledger.
And that, in a nutshell, is the forecast from researcher Kevin L. Brown. It's all built on that foundational theory of Triune Harmonic Dynamics and its universal 3-6-9 pattern. So what we have is a detailed and, most importantly, a testable vision for the future. Which leaves us with the final question, doesn't it? Are we looking at the inevitable future of finance, something driven by a hidden universal rhythm, or is this just a really fascinating theory? Well, the off-ramps are clearly marked. I guess only time will tell.